Hey everyone, welcome back to the Maverick channel. Now today we want to talk about Bitcoin, we want to talk about Fetch.AI as well. Now the reason we're combining these two is because Bitcoin has had some pretty good price movements. The fact that it went to 29,000 and it went all the way to 42,000, and we've also noticed that Fetch.AI has had some pretty good price movement. Now Bitcoin is king in the sense that it has the largest percentage of the market capitalization. So usually the market moves in tandem with Bitcoin. Usually Bitcoin is the first to move, then the rest of the crypto market follows, or they move in tandem. As Bitcoin shoots up, other cryptos shoot up, and then those phases keep happening. Then eventually maybe as Bitcoin consolidates, the altcoins might go up, but sometimes it's a direct correlation. But usually, the first movement, the first sort of, if we could call it a trend, the first bullish trend is normally caused by Bitcoin. And then consequently, when Bitcoin goes down, it creates that cascading effect that then causes the market to drop. Now, your investment in Bitcoin should be dependent on your risk tolerance and how you adjust your risk depending on what basis, your risk adjustment basis, it should depend basically on how much money you're dealing with and yeah, your risk tolerance. But dollar cost averaging in is always one of the best moves. So essentially you have say money per week or money per month or money per day, depending on how you earn, money that you're going to allocate to Bitcoin and cryptocurrencies in general. That's one of the best strategies to do, as opposed to trying to watch the markets every day and trading. That gets extremely stressful. So guys, let's jump right into this video. We want to look at this idea, the fact that many public institutions have actually garnered so much interest in Bitcoin, and these are the companies that have publicly announced Bitcoin, and they're explaining their various interest in why they're not only publicly announcing, but they're also actively holding Bitcoin onto their balance sheets. So it's a form of, it's a diversification strategy from the traditional financial instruments into this new asset class, which is continuously being recognized as an asset class through the adoption from certain countries like El Salvador, and through the basically the evolution of the crypto laws in different countries like Germany, and this continues to be a global debate. We're talking about a financial instrument, Bitcoin and cryptocurrencies, that are redefining finance, lending, borrowing, interest rates, basically having a decentralized infrastructure that manages interest rates. So you all know MicroStrategy, basically Michael Saylor, the king of laser eyes. They've been acquiring so much Bitcoin. They have over 100,000 Bitcoin right now, and recently, I think 2 weeks back or something, they acquired a ton more Bitcoin. Recently, actually, when the price of Bitcoin dropped to 29,000, I don't know which range exactly, but they acquired some more Bitcoin, and I think it's actually here. No, this is how much he personally holds, which is 17,732 Bitcoins. So you can see a lot of these institutions that are holding billions of dollars in Bitcoin, or they're putting this kind of money on the line into this asset class, only means that, well, who are we to not pay attention to this asset class, and especially the amazing technology, what this can do beyond just the investment. We're talking about an internet, a money of the internet, or an internet of money, actually. So Tesla, we can see Tesla. We know Elon Musk has mentioned before during the Beer Word event, and we've also known before that Tesla holds Bitcoin. SpaceX, I think, also holds Bitcoin. Elon Musk himself. So these are the institutions that we know of that are publicly announced. Galaxy Digital, Voyager. So this is going down in terms of Michael Saylor's MicroStrategy holds the most Bitcoin. Then it goes down the list. Square, Jack Dorsey, we know how bullish he is around the Bitcoin ecosystem. Then I want you to look at, this was a Reddit post. It only took 4 months to double the global crypto population to 200 million in 2021. So this is what that means essentially, is that there's an increased interest around the crypto ecosystem, and that's only going to exponentially increase with time. Every single day there's new projects, there's new people involved in this space, because the globe is starting to really realize that, as Michael Saylor says, Bitcoin is and cryptocurrencies, but his focus is on Bitcoin mainly. It's real estate, virtual real estate. But we've always known that in terms of it's an infrastructure that can accommodate many applications and many use cases, depending on basically how high your programming skills are and how good you are at navigating computer-based languages. That essentially becomes your limit. Of course, other things like scalability and how fast the network is, but as long as the fundamentals are there, decentralization and security, it really helps. So there is this other tweet that was posted by Dan Held. So the game Monopoly sold for $2 in 1935. In the box you get Monopoly money. So the original stack of Monopoly money from 1935 is worth $50 as a collector's item. Monopoly money literally holds more value than your fiat currency. And obviously we see this chart, we've seen it before, using a scale on the y-axis of 100 and the scale on the x-axis representing years up to 2020. We see that when the Federal Reserve was created back in 1910, 1900s, the beginning of the 1900s, 20th century, we see that the value of the US dollar essentially started collapsing. Then as you go on the scale, the FDR executive order of making gold illegal. So going through that phase, it kind of boosted up the price. The purchasing power of the dollar. Then the Bretton Woods established US dollar as a world currency. And then we go into Nixon in 1971, taking the dollar off the gold standard, which eventually led to this whole infinite money printing that's going on. But I think at this point, most people in the world, at least that are paying attention, are aware of these kind of effects. Mark Zuckerberg has this idea of converting Facebook into a metaverse, but that kind of goes off on the tangent, but it's still within a decentralized world. So I've talked about things like Decentraland, there's Somnium Space, there's Axie Infinity, I think there's Sandbox as well. These are some of the ecosystems or metaverses or virtual worlds that are forming in the crypto space. So it goes just beyond Bitcoin or the use case of Bitcoin that we know of today as a currency, and it has evolved into as a store of value. But when I talk about Bitcoin, I also mean cryptocurrencies in general as well, and what they're going to do and how they're going to evolve. So we see companies like Twitter take on that stand. Then another use case of decentralization, on this channel I emphasize a lot on synthetic assets. So we can see the whole idea, the market behind equities, derivatives, commodities. That whole market is, and different companies that have assets under management. When it comes to this, we see some companies, State Street, I think that's the one. State Street is the one that holds up to, I think, $46 trillion assets under management. That's crazy. So Binance was basically trying to tie into derivatives, equities. We would see that we saw earlier that they were trying to sell Tesla and Coinbase shares. So they're trying to expand into that. So I guess the powers above were getting threatened. So under the guise of regulation, I'm not going to get into this, the politics involved. I'm not a defender of Binance or whatever. But my point is, that's why we need more decentralized finance platforms. We see platforms like Synthetics. We see platforms like FTX, MetaLex being built by Fetch.AI. These are ecosystems. These are interfaces that are making the idea. We also have Uphold that are making it possible for any user globally to have access to financial derivatives, essentially. So this is not bad for any institution out there, especially that's publicly listed. This is going to create a boost in your revenue beyond what you ever imagined. So imagine if anyone in the world can buy Amazon shares. Even if they don't use Amazon, anyone in the world can buy Tesla shares from anywhere. You don't need permission from your bank. This is going to create a massive exponential boost in the value of these assets. The world, I know we're going through tough times right now, but the world is going to really get shocked by how much value this value is going to be multiplied, especially when you take the concept of circulating supply multiplied by the price. That value of market capitalization always boosts way higher than the amount of actual value, actual money locked in there. So guys, Fetch.AI, just a quick reminder, Fetch.AI is now available on Coinbase. I know this was news that came out a few days ago, but this is exciting. We know this is recognition for the Fetch.AI ecosystem. This is more attention, more light, more legitimacy. The hard work is getting, I know this is a centralized platform, but it's one of the biggest out there. And this is very important for the rest of us. So guys, just a quick reminder. Then there was this article that's talking about digital assets infrastructure landscape in 2021. Now, I'm not going to go through the whole thing. I just want you to pay attention to the conclusion in this article. In close, if data is new oil and blockchain is the foundation of the new internet, then the companies laying the infrastructure and establishing processes to procure and refine digital assets data are uniquely positioned to capitalize on the continued expansion of the next web, the value of which is priceless. That speaks for itself. We'll leave it right there. I think you need to look a bit deeper in this whole, what is happening with the financial markets, what is happening with the whole idea, with the understanding of technology. This is essentially changing how our understanding, or the global understanding of what happens when you get the financial layer as it exists right now and give it a foundational layer, which is a financial layer, and then build all derivatives, commodities, and asset classes on top of that financial layer, such that figuring out how money moves is not the idea here. That problem has been solved, but rather what kind of technology is built onto these asset classes that already have a underlying financial layer. Now, let's look at this tweet from Michael Reuter. He's saying, let's have a look at the financial market worked by what we call robo-advisors. Guys, this is quite interesting. So in the good old days, and what now is disrupted by DeFi agents. So market size 2021 greater than 1 trillion. So here we know that Fetch.AI designed a DeFi agent, which has been working spectacularly when it comes to, tackling it's a market loss, essentially. DeFi, when you see things like rug pulls or other kinds of threats that come with decentralized finance, especially rug pull or what do they call, flash loan attacks. So you have this agent that can essentially extract your liquidity from. It's been integrated with PancakeSwap, which is the biggest DeFi platform on the Binance chain, and Uniswap as well, which is the most popular and one of the biggest, the most known platforms, decentralized finance platforms on Ethereum network. So this agent has seen 30,000 new users. This was developed like 3 weeks ago, I think, if I'm not too mistaken, but not more than a month ago. And it's already seen 30,000 DeFi agent users, new users that are using this platform. And this is one of the first actual use cases built on the Fetch.AI ecosystem. If you're new to this channel, Fetch.AI deals with multi-agent systems, autonomous economic agents, and utilizing machine learning and virtual and artificial intelligence, essentially, to optimize data usage and data ownership within cryptocurrency, combining AI and blockchain. So what are robo-advisors? Robo-advisors are a class of financial advisor that provide financial advice or investment management online with moderate to minimal human intervention. They provide digital financial advice based on mathematical rules or algorithms. I'm not going to read this other article here. Basically, it's showing us some of the companies that build. It's explaining how the idea of robo-advisors, essentially automating the financial process. If you're a customer and you need some advice on how to trade a financial instrument or something, you can literally, with limited human intervention, you can get a lot of information that would have taken a much longer time if you had to get essentially, the purpose of robo-advisors is to eliminate the human interaction as much as possible when it comes to getting advice on financial instruments and how to go about this space. Now, we've seen a lot of companies that emerged from around the 2008 financial crash that really realize this idea or how beneficial it's going to be. I think with the advent of computers and the Wall Street being dominated by computers, making trading faster, they figured that, certain companies figured that why not really automate this process or build a product around this process. But we know these companies and institutions, this becomes very limited to people in general. So by the end of 2015, robo-advisors had an impressive $55 billion assets under management. The 4 major players in the industry dominated robo-advisor market share. Vanguard robo-advisor with assets under management 31 billion. Schwab Intelligent Portfolios assets under management 5.3 billion. We have Betterment, and we have Wealthfront as well. So we've gotten a basic understanding of what these robo-advisors are. So let's look at the conclusion here, which was if I can find it. The conclusion. So after that, the growth rate is expected to be 21.4% for 2022 and 2023 and 17.7 for 2023 to 2024 for a total amount of assets under management of $2.113 trillion and $2.48 trillion respectively. So the rise of the robo-advisor market has been a bumpy one. A strong start led analysis to completely overvalue the industry in 2016, attaching expectations to it that it could have never possibly lived up to. So year after year, the growth rate kept dropping and robo-advisor companies kept reporting operating losses as they faced down growing customer acquisition costs, a more competitive market environment, and new regulations by authorities. So however, the market has been growing much slower than anticipated, but it's still going strong. Surprisingly enough, the COVID-19 pandemic of 2020 seems to be what was needed to put this industry back on track and give robo trading an unexpected boost. So where robo advisors end up remains to be unseen. The fact is, despite the turbulent year, they're now in a good position to start strong. More and more millennials are reaching the age where they're looking to invest to boost their personal finances, so the potential target market for the industry and robo-advisor demographics are only just now opening. Bottom line, robo-advisors are the inevitable next step in the evolution of trading, and like augmented and virtual reality, they're here to stay. So we should see a strong market and positive robo-advisor trends emerging from a tumultuous so we should see a strong market and positive robo-advisor trends emerging from a tumultuous decade. So we should see a strong market and positive robo-advisor trend emerging from a tumultuous decade. Keep an eye on the robo-advisors' latest news. So the reason why I'm talking about robo-advisors is that, first of all, one of the companies we've seen there, we can see robo-advisor Wealthfront adds support for Grayscale's Bitcoin and Ether funds. We know Grayscale is the company that's really trying to infiltrate the ETF market within the United States, and it offers exposure to its institutional or high net worth clients to the cryptocurrency space, especially Bitcoin and some other cryptocurrency they hold. It gives their clients exposure to those instruments without the clients necessarily holding the asset classes themselves, so their risk is reduced. And they want to infiltrate the exchange-traded fund market, as the laws in the United States around that are getting decided, and as they shift, hopefully towards a positive sense. Hopefully they get enacted. Essentially, I think it would be good for the parties that are interested in that kind of thing. Now, the reason why I talked about robo-advisors is because of the use case of Fetch.AI. And essentially, if you see the applications of Fetch.AI, you have an open economic framework where this is a world of the agents where they can live in there. They have these autonomous economic agents that are blockchain agnostic, that are language agnostic, that are supposed to make decisions based on their own intuition of what is going on, but at the same time having the basic the basic understanding of what the user or the owner of that particular agent has. And of course, you know that they're cryptographically protected, because to have an agent, you need to have a private key attached to that, and then you have a public key attached to that, which means, and these agents are interoperable. So you can form them, you can manifest them using by using the Fed token. You need to have the Fed token to manifest these agents, but at the same time, you can program them to really transact in any currency out there because of, well, the nature of their programmability. So when you look at robo-advisors and what those companies were trying to do, it's still very centralized and it's still very limited in the sense that not everyone, I can't just go up there and they start giving me this service. It must be limited to high net worth individuals or whatever their clientele is. So Fetch.AI is essentially, unknowingly or knowingly, going to disrupt that kind of business model. It's going to bring that business model, which is expected or projected to grow. It's probably the missing link of that, because we see that the adoption rate of the robo-advisors was kind of dwindling or not increasing as fast as it should. And here we are. Maybe that missing link was the ability to have an economic layer, the ability to have true automation and leveraging machine learning and artificial intelligence in a decentralized manner, and having having a dynamic environment, having these agents that are agnostic, that are not controlled by anyone, and by that fact, It means they're able to make decisions outside of a centrally governed ecosystem or infrastructure that would really predetermine what these agents are supposed to do. So by having a dynamic environment that's decentralized and being able to communicate with other agents seamlessly to look for the knowledge that they need to perform certain tasks, the missing link really could have been blockchain, and blockchain could not really have happened before 2009 with Satoshi Nakamoto. So essentially, after looking at robo-advisors, and we see a company like Fetch.AI, it's going to infiltrate this market because it's really been the missing link. At least it looks like it's been the missing link when it comes to combining artificial intelligence, machine learning, and giving a basic financial layer or economic layer to these things that are happening, to what is going on right now, and essentially democratizing the concept of data, democratizing data ownership, taking it away from the institutions, putting it in the hands of the owners, and adding a programmable layer which is decentralized, so anyone can create a product, anyone can adjust their agent depending, narrow down to their most fundamental use case or what they're looking for, without having to contact an institution like the ones we've just looked at with the robo-advisors, but essentially democratizing that whole, or dematerializing, taking it away from the institution and putting that amount of power in the hands of any individual out there that has a dream, that wants to create something. So I really think that these technologies are going to be really important for the progression of humanity, and at least the way we perceive democracy, pure democracy. All right, guys, that's all I had for you today. Hope you enjoyed. Hope you learned something. I always do. And hope to see you on the next one, guys. Take care. Bye-bye.